Hey guys, Chris here with Crypto Bee Vision here, bringing you another wicked video to add to our Trading 101 playlist. Today we're going to go over common chart patterns. We're going to go over descending and ascending wedges, what happens when they're broadening, some percentages on how exactly you calculate whether it's going to go up or down. We're going to go over some bull pennants, some inverse head and shoulders, and we're going to go over maybe the best thing for you guys is to how to find your targets when you're in a bull pennant. So with that, we're going to be able to decide whether we're in a bull or bearish market, short and long term, which is super important, guys. So I appreciate you watching. I'm going to ask you to like the video, subscribe to the channel, drop me a comment, and ding that bell, guys. And if you have any questions, just get at me in Telegram. It's not a big deal. I'm in there most of the day, every day. And also, there's a lot of learning utilities you can find on Google simply just by searching some of the keywords that I use. And also, I have about 5 or 6 different sheets that I can send you. Just get at me in Telegram. But without further ado, let's dig into a couple of the main patterns, and then we'll hop into the charts right after. Thanks, guys. Guys, as you can see, I just Googled bullish and bearish patterns. This is going to be your key. Google is your friend. Google has everything, mostly everything. Before you ask a question, Google it and see if you can get your answer there. You never know, you might learn something. But here you can see a wealth of knowledge. I've chosen 2 to talk about just quickly here before we hop into the charts. This is your cup and handle. This is very bullish, right? And then you have your cup. Goes into your handle, and away it goes, takes off. Now, this is a nice one. I have these actually tacked on the walls, guys. If you learn how to figure out these basic patterns, you'll be able to look at a chart, boom. What is it going to do? Is it bullish, bearish? Then you can draw your trend lines, figure out where your entry is, measure your exit, which we go over in the chart, and find your stop loss. That way you keep nice, safe trades, and you're trading according to what the chart is telling you. Now, every minute candles change. So be aware of that the candles and the patterns will change from time to time, but with your entry and exits at the safest spots, especially with a stop loss, you should be good to go. So as you can see here, double top is bearish. Head and shoulders is bearish. Rising wedge is bearish. And then you have your double bottom, and inverse head and shoulders, falling wedge, all the opposite of what you see there. These are reversal patterns. There's a bunch of different kinds of patterns, continuation patterns, reversal patterns, and so on and so forth. Google will definitely help you out with that. If not, check the playlist. There's definitely something in there for you. So without going any further, guys, let's jump into the charts and let's get it figured out. Okay, guys, so now that we've gone through a couple of the major patterns when trading on these charts, we're looking at the Bitcoin chart right now, and it's got a bunch of different patterns, so I figure it would be a good basis to kind of see what's going on. So as you can see here, as a start, we got these lower trend line, upper trend line. Now these have 1, 2, 3 touches, makes it valid. 1, 2, 3, and your 4th touch breaks down through. So this is called an ascending broadening wedge, guys, and this is a bearish setup, right? Because the price action goes off higher lows and higher highs, making it ascending up if you follow the trend lines. And then of course it's bearish, it broke lower. Now this has a 68% chance to break lower, and then that makes it a 32% chance to break higher. Now if it is a bearish pattern and it breaks higher, it has a more parabolic move, so it will have more steam behind it. It's basically like it overcame the odds, right, guys? And then it dips down, right? And then it popped back up to here. This is a major support level at 16,453. And then when it pops back up, and now this is making a bullish pennant, right? You can see, looks like a pennant with the lower trend line extending all the way back, and then your upper trend line with 1, 2 touches getting valid, 1, 2 touches also getting valid. So basically the bulls need to hold the bottom trend line here in order for more price action to go up top, because if they don't, it's going to look like a double top possibly, right? 1, 2, and then it also if that drops down, I'm assuming it's going to hit that support, and then we're going to be into a even bigger trend, bearish or bullish. Every day the chart moves. We're on the 4-hour chart. You get more information, right? So with that, there's also a possible inverse head and shoulders. We know that head and shoulders is a bearish setup, and an inverse head and shoulders is a bullish setup. So you can see here, low or high shoulder, low head, high shoulder, and then it should break higher. Now to get your actual target for this, guys, is you take basically the neckline, which would be about here-ish, right? So if we grab our tool, price range, you can go from the bottom or the top of the head, which is actually the bottom, to about the neckline, which is there. So 16.7%. Now, if you roll, your neckline's probably that green line. So let's drop that down there. It's within reason, and you never want to set your take profits at the absolute top of where the profits would be. You want to set them maybe 75-80%. That way you lock in profits, because it could dump right after. And then to follow your target, if this inverse head and shoulders plays out, you could be looking at a price of possibly 21,150-ish, and from there you can kind of take your profits, right? So I would probably set my profits at 75% of that. So I'd probably set my profits, if I was going to sleep or something, at 20,800. So this is kind of what the setups look like. That's how you get your target on this one, guys. Now let's hop into one more chart quickly and we'll go over that. So just a couple things real quick here, guys. These are a couple really common ones, and I'll show you how to get your targets on a bullish pennant. So this here is a descending bullish wedge. So with this, you get your upper trend line and your lower trend line. Now it does pop out sometimes, and then it came in, which that would be called a retest, but it popped back into the pattern here. So I would have had to call a breakout here. At this point, I would have bought on this red candle right there after the breakout. One candle close after the breakout, depending what chart you're using. We know that it's in the breakout video with the Trading 101 playlist. And then it broke back in. But where my stop loss would have been, guys, I would have had my stop loss after I bought there. I probably would have set my stop loss right here, right there. That would have been my stop loss. So I would have been out 11. I would have been out 35 cents a coin, depends how much you bought in. But then you could have entered back in at the bottom of the trend line. So, but we won't get too off track here. You got your validity, 3 touches on a trend line to make it valid. So this is a descending wedge, which means lower highs and lower lows. So as you can see, and then it finally breaks out, guys, and it goes up, and then it hits its resistance here, and then it goes into a bullish pennant. Now, one thing I wanted to discuss with you or show you was how you get your target. So this is target 1 and target 2. How you get your targets is you draw a trend line from your opening to your opening of your bullish pennant. So you would draw this trend line, so, and then you would move it up to your breakout point where you buy the breakout, right? About there, and that'll give you an ish of where your target could be. So like I said, 80%, guys. So if I was to buy the breakout and then it went say 14%, you want to do 80% of that, which is about, let's just call it 10%. At 10%, you would have been able to capitalize on that actual breakout. So you would have sold there, and then you would have kept an eye on it, and it would have popped back down, which would have been considered almost a retest. Well, right there, it would have sold at 10%, and then if you bought your retest down here, you would have been good to go. And the second way to get a higher target is you draw your trend line from the top upper trend line of your bullish pennant to the very low of where it broke out in the trend down below. And then if you were to do that, you would have been up and almost bang on with that target. But at 80%, guys, where you would have sold, I know I'm focusing on the 80%, but it's really important. So that's 26%, guys. So 80% of that, let's call it 20%, you would have made another 20% around here. And then you would have sold there, which would have made it right here, and then so on and so forth. So I hope this helps you guys. If you're interested in any of the actual, like a full sheet of setups, I have those. Just let me know in the Telegram, and you can easily Google these as well. Just Google Bitcoin pattern setups or bullish patterns, bearish patterns, stuff like that. So I appreciate you watching, guys. Please don't forget to like the video, subscribe to the channel, and join that Telegram group. Drop me a comment and ding that bell. So appreciate that, guys. We'll see you on the next one.